Hi everybody, my name is Anastasia Dvorak. I'm the Calgary Lifestyle Guide. Welcome back to my channel. I'm a local real estate agent and a blogger, and today we're talking about 8 things you need to know before you buy your first home in Calgary. Before you start looking at houses on Realtor.ca, we need to cover the following 8 concepts that will help you buy the house that you will love and will be able to comfortably afford. And stay till the end, because at the end I will be sharing a lot of time saver tips that will help you buy the best house that works for your family. So why should you watch this video? Buying your first home is one of the most important purchases you'll ever make, and I want you guys to save time and money. So let's get started. Number 1, permanent steady employment, permanent part-time steady employment, or permanent self-employment income that is steady. Basically, all you have to remember is that permanent and steady. That's what the lenders want to see. Typically, a lender will prefer that you have a permanent full-time position where you've been working for at least 6 months. The lender will ask you for a letter confirming the length of your employment, your salary, and the type of employment. One tip for you guys, please do not make any large purchases when you're applying for a mortgage. Do not buy a car, please. And do not switch jobs. Okay, that can definitely kill your chances, and buying a brand new car will affect your credit rating, so don't do that. If you want to switch jobs, wait until the possession date, because the lender or the bank can call your employer and ask if you're still working there, and if you're not, they might not give you the mortgage. So please change jobs after the possession date. Mortgage providers do not like risk, so they would prefer that you have permanent full-time employment and that you're able to make regular payments. If you've been working for the employer for a long time, that will definitely help you out. And also, if your employer is a well-known company in Calgary, that will also definitely help. Stable long-term employment generally helps, but the lenders typically look at other things too. You can get a bigger mortgage if you're applying with your partner or your husband or a wife or family members, and you guys all have stable jobs. The type of employment you have will definitely affect your mortgage rate. Definitely makes more sense to get more stable employment, because that way you will get a better rate, and in the end it will save you a lot of money. As a part-time employee, you have to show that you also have stable income, and you will have to provide your T4s and information about your employer. You will also need to get a letter from the employer highlighting your hours, how many hours you work, your pay rate, and how long you've been working for at this company. Sometimes mortgage lenders are very cautious about part-time employees, so they may qualify you only based on a portion of your salary or potentially an average income for the last 2 years. So that definitely depends on the lender. Well, now let's talk about self-employment. You will be asked to provide 2 to 3 years of self-employment income. Generally, the lender wants to make sure that you're able to make the mortgage payments. So it's important to show the consistency in your income, or to show growth of your income, show that your company is growing. You will need to provide all the notices of assessments, all the T4s, all the statements, and additional information about your expenses and your revenue. It's best to work with a mortgage broker or a bank that knows how to handle self-employment individuals. It's also important to make sure that you don't have any tax problems in your corporation. Make sure that you pay all your taxes, everything's paid off, GST is paid, there's no taxes due, because that can definitely affect the ability to get a mortgage. Let's talk about unemployed. If you're unemployed, can you get a mortgage? It would be very, very difficult to get a mortgage if you're unemployed, even if you have a large down payment, because you will need to provide information that you have enough funds to pay the mortgage in full. Plus, you have to have enough money for 2 to 3 years after that. So that's 2 to 3 years of living expenses. You need to show that you have a reliable stream of income coming from another source. It can be income that's coming from your investment properties, disability payments, royalties, child support payments, and other possible payments that you may have. In this situation, I would recommend that you talk to a mortgage broker, because they typically can handle more risk and they can find you a lender that can help you in your situation. Let's talk about number 2, good credit score. I've recently made a video about it, and you can watch it right here. And generally, a lender wants to know a bit about your payment history, your payment habits, and they want you to have debt, but not too much debt. You can learn everything you need to know about credit score and how to get one and what's the best credit score in this video right here, okay? But just to quickly summarize this topic, here are a couple of things you need to know. In Canada, lenders determine your financial health by looking at your ability to pay your bills on time. Credit scores typically range from 300 to 900, and they have different attributes that match each score. So ideally, the higher the score, the better it is for you. The minimum credit score you need to get a mortgage in Calgary, Alberta is between 620 to 680, but that typically depends on the lender. So I would recommend that you find out what score you need for your situation. In addition to looking at your credit score, the lender will also take a look at your credit report, which shows all the credit cards you've ever had, all your payment history, if you've ever missed any payments, if you have any collections on your report, or any outstanding bills that you haven't paid. I would recommend that you check your credit report for free through creditkarma.ca or borrowwell.com. It's absolutely free. You can also go on to transunion.ca or Equifax, and you can request your free credit report there. Many newcomers and people who come here that are not very well versed in financial matters think that they don't need to get any debt. They don't need debt, they don't need credit cards. And that doesn't help them because it does not build their credit history. Lenders want to know that you're able to pay your bills on time. And the only way you can show that is by getting a credit card and by paying it off on time. And I know this seems very confusing, but you do need to get some sort of debt and pay it off to show that you're trustworthy. Otherwise, you won't be able to get a mortgage that will work for you. You'll get a higher rate and you'll end up paying a lot more money. So I would recommend improve your credit score, watch my video, learn everything you need to know there. And once you do, you're on your way to getting the house of your dreams. Let's talk about number 3, ready to go savings that will go towards the house of your dreams. So we're talking about down payment. So have you saved enough money for the down payment? Down payment is all the money that you're saving that will go towards the purchase of your home. Buying a home in Calgary will always require some money up front. You can't avoid that. And if you do have to put money down, I would recommend that you put 20% down, because that way you will avoid mortgage insurance. It's also called CMHC. Mortgage insurance is there to protect the lender in case you default on your mortgage. So this means that this extra insurance amount is added to your mortgage, and you will have to pay it every month. And it can be a little bit more expensive, but at the same time, it allows an option for people who do not have 20% down payment to actually purchase a home. If you are unable to put 20% down, you'll have to put less. So 5, 10% down, 15% down. But you'll have to pay mortgage insurance, which is also called CMHC, and that payment will be added to your mortgage. So you will have a higher mortgage payment, and in order to avoid this CMHC insurance, you will have to provide 20% down payment. No, I do understand not a lot of people can do that, and that's totally fine. But if you have an option, make sure you put 20% down. Basically, the more money you can provide towards the payment of your home, the less of a mortgage you will need, and the more likely you will get that mortgage approved. What is the minimum down payment in Calgary, Alberta? In Canada, there are minimum down payment requirements that are based on the price of the property you're willing to buy. I've put all the information on the screen for you guys, but generally, if you're buying a house that's under $500,000, the minimum down payment you'll have to pay is 5%. Again, I highly recommend that you put down 20 or more if possible in order to avoid the mortgage insurance, but it's totally up to you. Also, I wanted to show you guys this amazing mortgage calculator for Alberta. It is on my website. I put the link in the description. So feel free to use this calculator and figure out which mortgage scenario works best for you. Let's talk about number 4, willingness to stay in this property for 5 to 7 years. Real estate is a long-term investment. If you are not willing to stay in the property for 5 to 7 years and you need to leave the mortgage early, or you need to sell your house, you need to make sure that you read your mortgage contract. There might be a really big mortgage penalty that you might need to pay. So before you agree to this mortgage contract, make sure you discuss your desire to sell a place in 3 to 4 years, or in 2 years, or the potential for you to move to another country or back home or whatever. Your mortgage professional needs to know that your mortgage penalty needs to be as low as possible, or that your mortgage needs to be portable, or other things. Again, this is a discussion for your mortgage provider, not for your real estate agent, but I highly recommend that you think about why you're buying this house. if you want to live there for 5 to 7 years, there is a chance that you can improve your resale value, but there's no guarantees. A resale value is a long-term commitment. You don't expect that if you're selling a house in 2 to 3 years or 5 to 7 years or even 10 years that your house is gonna suddenly increase in price. That doesn't happen. It did happen in Calgary, for example. In 2001, we bought a house for $167,000 and now it's worth $410,000. That it's been 21 years now, right? So that definitely took a lot of time. So real estate is a long-term investment, and I would recommend that you work with a mortgage broker who can help you in your particular situation. If you do need to break your mortgage, be aware of the penalties. Number 5, let's talk about mortgage pre-approval and some tips on how to choose the best mortgage professional that will work for you. So let's just cover the basics. So mortgage pre-approval is when you get this letter that pre-approves you for a certain type of mortgage that is valid for from 90 to 120 days, that pre-approves you for a certain rate and a certain type of mortgage, so variable rate, a fixed rate, a percentage of it, or a type of mortgage that you're getting from a financial institution. So this mortgage pre-approval, it is valid for a certain amount of time. It depends on the lender, usually 90 to 120 days. However, it does not guarantee that you're getting a mortgage, guys. I'm sorry. It is a piece of paper. It is an initial step, but it does not guarantee that you will get a mortgage. So it is important to choose who you're going to go with, because you'll be providing a lot of information to this person about all your financial history. And I think it's very important to work with someone you trust and with someone who can provide you the best rates. And there are 2 options that you have. You can work either with your bank or with a mortgage broker. Also, it's important to know that mortgage approval takes a lot of time. Usually we're given 10 business days for mortgage approval, and usually it's, sometimes it's just not enough time for a lender to get all the information from you, because they will require a lot of information from you, and it is important that you give it to them on time. And that's why I highly recommend, I actually insist on it, that you need to talk to a mortgage professional before you start looking at homes. And personally, I will not show any houses to a person unless they have actually talked to a mortgage professional, because I cannot take that risk. Because if I show you a house that you cannot afford, you will be traumatized, you will be depressed, you'll be very upset. And if I show you anything else that's kind of within your budget, it will just not be the same. It will never be the same as that beautiful house that's way over your budget that you cannot afford. And it just gives people that sour taste in their mouth. And for me, it's just very hard, because I can see that the client is just in a different mood and a different mindset. And for me, I just never show houses to clients unless I know they've been pre-approved, they've actually talked to a mortgage professional, and I know their maximum budget, because I don't want to waste their time and I don't want to waste my time. I don't want you guys to get upset. I want you to buy a house that you can actually afford. So which mortgage professional should you choose? So should you go with a bank or should you go with a mortgage broker? Let's figure it out. Banks usually are able to only offer their own product. They cannot offer products from different banks. Mortgage brokers usually work with multiple different financial institutions, including major banks, so they can offer you different options, different rates, and they're able to offer you a variety of products. In fact, 40% of Canadians didn't even know that they can negotiate their rate at the bank, and typically just accepted the first offer at the bank. That's sad. Don't do that. If I were you, I would get in touch with a mortgage broker, and if you don't have one, you can send me an email and I can give you a list of great mortgage brokers that you can choose from, and you can talk to them and they can help you choose the right mortgage rate, because they have a variety of institutions they actually work with, and they can give you so many different options you can choose from. If you want to stay with your bank, you can. You can also work with a mortgage broker, get a rate from them, and take that rate to the bank and negotiate and say, hey, I got this rate at this particular institution, can you match this rate? And the bank will say yes or no, but you do have to negotiate to get somewhere. Banks typically like to consolidate your products, so they may give you a better rate, but you will not get it until you ask. One more thing to mention is that mortgage brokers do not have the same lenders that they work with. They all work with different lenders. And if one mortgage professional couldn't help you, somebody else will help you, okay? So don't give up, okay? And know that working with a mortgage professional is free. You don't pay anything. They just get a commission from the lending institution that processes a mortgage for you. Let's talk about number 6, realistic expectations of the real estate market. When you're entering the real estate market, it is really important to determine what kind of market it is right now, because it will definitely affect a lot of things. For example, if there's a seller's market, it means that there's not enough properties on the market, that there are a lot of buyers, and these buyers are buying these houses. So there are multiple offer situations, there's a lot of competition. So the seller demands higher prices and less negotiation margins. So this is actually what's been happening in Calgary in spring 2021, when we didn't have enough houses on the market. Due to COVID-19, a lot of people were scared. They didn't want to list their house. They didn't feel comfortable with strangers walking in there. So there were not that many listings on the market, and people were ready to buy. They were tired of their house. They were tired of their property. They were stuck there for a year. They finally want a property with an office. They want a bigger home, and they're ready to buy. And because there were not enough houses on the market, there were many homes that were sold over the list price. Yes. So you have to understand what kind of market Calgary is in. If there are a lot of properties on the market and not enough buyers, it's called the buyer's market. The buyers have the upper hand, and their realtors can negotiate lower prices for their clients. People usually ask me what kind of negotiation decrease in price should they expect. That really truly depends on the seller's motivation, but typically you can expect the minimum drop from $5,000 down, $9,900 down, sometimes $15,000 down, even $25,000 down. That's what I've done before for my clients. But that truly depends on the seller's motivation. If the seller's not willing to drop the price, you will have to give him the price that is as high as possible. It truly depends on the situation. But typically, the average is about $9,900 down or even more. But that again depends on the situation. What I want you to remember from this is that if there's a buyer's market, then yes, you can expect a reduction in price. If there is a seller's market, you can't expect that. If there's a seller's market, you have to usually come up with the best offer that you can afford, because you don't want to enter the multiple offer situation. So typically, if the the house is listed at $500,000, you have to offer $495,000 if you want to avoid the multiple offer situation. And typically, this is just an average. Sometimes with the house is so amazing and you don't want to lose the house, you might have to offer full price from the start. Sometimes the market is so hot, people offer $5,000 overpriced, $10,000 overpriced, over the list price, or $25,000 over the list price. It truly depends on the situation. I can't tell you that there's like a standard that you have to reduce it by this amount or you have to give this amount. But I'm just saying, if you don't want to lose this house, you should give as much as you can. And if you don't want to, that's a whole other story. If you don't want to give as much as you can, then don't. But there is a chance that you will lose this house. So please be aware of that. So again, we're talking about this because I want you to understand the buyers or sellers markets in Calgary. When you're entering this market in order to purchase a house, you need to know what the situation is right now at this point. So talk to your realtor and ask them, hey, what's going on in this market? How much negotiations can we expect? What's the price reduction can we expect, and things like that. And in terms of figuring out how realtors price properties, I will definitely cover this in this video. One more thing I wanted to mention to you guys is that even if your offer is great, the seller is not obligated to sell this house to you. Yes, I've actually had a situation where I've represented my buyers and we offered much less than other people, but we had a story. We had a great letter that my buyers wrote, that I helped them write, and we provided their photos and provided cupcakes and cakes and desserts, and we just really explained how much we love this house and how it was perfect for their family. And they had a little daughter and a little son, so they had photos of their kids, and everything was submitted in the offer, including the letter, the cupcakes, and the story and the pictures. And The seller was so emotionally moved by this letter that they actually chose my buyers because they wanted the house to go to a good family, and this was a great family. So this can be one of the methods that we use to get the house of your dreams. However, sometimes sellers are very emotional and they may not necessarily sell it to the highest bidder. They may sell it to a family that they actually like. In terms of the letter, it's extremely important to be authentic. You need to be honest on why this house is perfect for you, because truly this is your chance to get the house of your dreams, and you have to put your heart into this letter. And that's why I recommend that my clients need to be very honest, and they need to be straight up and tell them what made this house so perfect for them. You can share a bit of your personal story, and there's always a risk that the offer will not be accepted, but at least we tried. And again, this kind of letter is truly, I would say it's not really, it is a strategy, but at the same time, it is an effort that comes from the buyer because the seller actually reads about them and learns about them and learns about their family and sees their faces. It humanizes this process and it humanizes the buyer. And the seller is actually able to connect with this family. And what we're truly here, why we're here, we're trying to make this connection. It's not just about a transaction. You know, for the seller, sometimes it's really an emotional process of selling a house. So they want this house where they spent, 20, 25 years living there, having children, having family over, experiencing all these great moments. They want this house to go to a good family. And that's why I think in multiple offer situation, if you can potentially provide some sort of humanity, and if you can represent your buyers, and if you can show your buyers and can make a connection with the seller, you will definitely benefit everybody. Everybody will be happy that the house is being sold to a great family, and everybody's happy. And it's not always about the money, guys. It's not always about the money. Real estate is extremely emotional. It's not an emotional. I'm like, oh, my eyes are wet. My eyes are wet. Basically, real estate is a kind of job where you are someone's therapist, you're someone's guide, you're someone's almost financial advisor, you're a real estate advisor, and you're guiding them to their dream home. And when they finally get that dream home, your whole life changes. Like when I buy somebody a house, it's just, there's so much joy in my heart. I'm so happy for them. It's not about the money. We do all this work not for the money, because we just love it. That's what the thing is. You're making a huge difference in a person's life. And when you do that, it changes you. And that's why I do this job. That's why I make these videos for you guys. I just want to make a difference, okay? I want to show you that, there's so much information you can learn. And the reason why I'm doing all these videos is because I want you to learn that there's a lot of houses out there. And I want to help you find the right house that works for your family and that works for your budget. So anyway, this is just kind of like a side story to this. Let's continue to the next topic. Also, Calgary real estate has its own seasons. Typically, our most busiest times are spring. So March, April, May, and then there's summer. It's a little bit slower because in July, people usually travel and, they go on vacation, or they're basically away from the city because it's super hot in Calgary. And then in the fall, it slows down a bit more. And in December, it's sort of like dead season, not a lot of stuff happening. And then it starts over again. Usually people sell their houses in spring. So it's the hottest season for real estate in Calgary is spring. So how do realtors determine property prices? So what we do is something called comparable property analysis. What we do is we look at recently sold homes within 3 to 6 months or within a year or less. And we see what are similar properties, what did they sell for? And we figure out the current price of this house or what the house is worth based on the community information, the street it's on. There are some streets that are more expensive than others, the type of property it is, if it has a garage or not, if the basement's developed or not, what type of house it is. Bungalows are typically more expensive than two-story homes because there's just not a lot of them in the city. Basically, we consider different types of information to come to an educated conclusion that can be supported by facts, statistics, financial analysis, data from MLS. We take care of all this information and then we come up with this price. Okay, so that's how realtors come up with this price. And sometimes realtors lower the price in order to encourage bidding, but sometimes it doesn't really work. It's not the best strategy, or typically it's better to price your home that's around the market value of the home, because you don't want to overprice it because you will lose the momentum, and you don't want to list it too low because sometimes people will not care and you will just lose money on that anyway. It's better to get the proper pricing for the house. Also, the general state and the first impression of the house matter. So make sure that your house is clutter-free, clean, everything. If possible, if you can upgrade the house a little bit, then do that. But again, don't go crazy with renovations. People may assume that, oh, I've spent $50,000 on this renovation, I will get that money back. No. You're even lucky if you get 50% back from that reno. So most people are not willing to pay more than the average price of a house on a certain street or community. So make sure that when you do your renovations, do them for you. Don't do them for the buyer, okay? Don't do that. And I will make a separate video about renovations and increasing your resale value, but just be very careful about renovations. And if you put a lot of money into it, don't expect to get it back. Do the renovations for yourself. Let's talk about number 7. Determine the types of properties that are available in Calgary, Alberta. I wrote 2 great articles about it. Please look in the description. I specified them. One covers all kinds of properties and the other one talks only about condos. I will be also making a video about this topic, and you can look it up right here in this link. Once it's done, it will show up right there. So let's cover the next topic. Number 8. So once you understand what's available on the market, you need to figure out what type of property works for your family, for your needs, and for your budget. Let's cover this. This is very important. Buy a house that you can comfortably afford. You don't want to be house poor. House poor is when you have enough money only to cover your mortgage payments and you don't have enough money for your life, for entertainment, for your family, for going out and enjoying your life. You don't want to be house poor, because once you buy this house, you live there for a month, the novelty of it wears off and you're just unhappy. Don't do that. If somebody gave you a large mortgage, you don't have to use all of it. Please buy a house that you can comfortably afford, that's actually based on your lifestyle. Calculate your expenses and figure out what works for you. And here is the best and juicy part. I'm so proud that you guys made it here. This is my shortcut. I will give you tips on how to choose properties that actually work for you. And let's go. Let's get started on this. Let's go to number 1. If you have kids, or if you're planning to have kids, please do not get an apartment unless you absolutely have to, or a duplex. You know why? Because people above you or below you will hate you, okay? Kids make a lot of noise. I have a kid, okay? And seriously, just trust me, you don't want to piss off your neighbors, okay? So if I were you, and if you have an option, please don't get an apartment. Don't get a duplex. Look at a detached home or a townhouse. Or if you have to have an apartment, you'll have to buy an apartment that's on the main floor, so that when your kids jump around and have fun, nobody will be upset because there's no bottom floor to piss off. You know what I mean? If you have health issues, or you have issues with your legs, or you have problems walking, do not get a 2-story. Don't do that, okay? Don't get a bi-level house. They have lots of stairs, okay? Look into apartments or bungalows, because these are flat, easy to walk, okay? Also, look at an apartments with elevators in the building. If you have a dog, don't buy an apartment. Look at a townhouse that has a fenced yard or a detached home with a fenced yard. There are lots of different options. You could also look into an apartment that allows pets. But again, if your budget allows for it, look at a townhouse that has a fenced yard. If you don't like living close to your neighbors, you don't like sounds, you just want more privacy, don't get an apartment. Don't get an apartment and don't get a duplex, okay? Ideally, get a detached home that has space between walls, there's no neighbors. But if you're bothered by the sounds, don't get an apartment or a townhouse, okay? If you don't like living close to neighbors, or if you're sensitive to sounds, don't get an apartment. Sounds, no wall sharing, okay? If that bothers you, don't get a duplex, don't get an apartment. If you don't like kids, or if you don't like a lot of crazy noises, then get an apartment in adult-only building. So these are typically, 18 plus, 40 plus, 55 plus buildings where people already reached a certain age where they don't party, they don't make a lot of sounds. It's a quiet place for you. You'll enjoy it more. If you're very sensitive to animal smell or you don't like pets, then you can get a condo that does not allow any pets. There are condos in Calgary that don't allow any pets at all, so you'll not be bothered. If you want to buy a large home with lots of space, beautiful backyard, spaces between houses, then don't look at homes in the inner city. They're expensive, they're also very modern, but very narrow, very close to each other, tiny backyards. Don't buy a house there. Look in the suburbs, okay? If you like everything brand new, don't worry about looking into older homes. Or look at homes that are only renovated, or look at brand new houses that are brand new communities that are located on the outskirts of the city, okay? Or if you have a big budget, you can look at inner city communities like Curry, where there are lots of great homes, but they will definitely cost you. But there are different options available for each budget, and I'm always here to help you guys. If you want to be surrounded by a developed shopping area, and if you like infrastructure that's already developed, and you don't like dust and smell and construction sounds, then please guys, don't buy a house in a brand new community because you will hate it. In 10 years, it will be beautiful. It will be fully developed. But during those 10 years, you will have to be surrounded by construction noise. And if that truly bothers you, then don't do it. Just buy a house in a community that's already developed. That will definitely save your nerves and save you time and money. If you want to live with older adults, you can find communities that have plus 40, plus 55, plus 50. So there are certain condo communities that only allow people that have reached a certain age. If you're 55 plus and you want to be in a community or a condo that has a clubhouse, as a social life, party room, fitness center, you can find that. I actually have a client who's looking for exactly that, and she doesn't want to be surrounded by kids or younger adults. So that's why we're looking at only 55 plus. And that is possible. And because I know our MLS system really well, I will be able to structure your search so we will be able to find the properties that actually work for you. And the last point is that if you're looking to make money and you want to rent out your basement, it would be great if you can buy a house that has already a suite in it, that has a kitchen in it. It can be a legal suite or an illegal suite, but buy a house that already has everything in it or that's ready for development, that you can save yourself time and money. And this is just a little shortcut that I created based on different scenarios. I can create you a strategy that's based on your situation. So please send me a comment, send me a message, send me an email, text me, and I can help you figure out the property that actually works for you. But these were just some general guidelines to save you time and money. And you guys are amazing that you watched till this end. So let's finalize. Buying your first home can be definitely an adventure. And it can be stressful, but it doesn't need to be that stressful because I want to make sure that your experience is positive. I've been in this business since 2011. I started in commercial real estate and then I switched to residential real estate because I love working with families. I'm a local real estate agent and I love what I do and I love making videos about Calgary. Thank you guys so much for watching. Please leave me a comment if you have any questions. Subscribe to my channel, follow me on Instagram, and feel free to reach out to me. I am very friendly. I will reply to you. Please, I ideally prefer if you would send me a text message or an email or leave me a comment and I will be in touch with you as soon as possible. Thank you guys so much for watching and I'll see you next time.